Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. It's the end of the day for the stock market, but I wanted to talk a little bit more about this Silicon Valley Bank situation. Signature Bank, the Federal Reserve and the Treasury had to come in and save the depositors at these banks due to well, I think a lot of it is due to the Federal Reserve for a couple of reasons. I think that the oversight of the regulatory bodies for these kind of companies was dismal. The old stress testing, obviously they weren't testing, and the stress caused some real serious problems. And they came in and averted a short-term situation, but I don't think that that's going to really fix the problem, because what Silicon Valley Bank did is they had about 195 million or billion dollars in liabilities and about 217 billion in assets. Those assets were a combination of mortgage-backed securities and long-dated U.S. Treasuries, as well as a significant portion was involved in loaning money to tech startups that have no credit rating. So when things started to go sideways, some of their customers got wind of it. People like Peter Thiel that really may have started the whole run on the bank by getting his money out from his founders fund and then also advising his clients to do the same. These companies were, I don't think the companies are blameless that had their money in there either. They were probably getting some very favorable terms on debt, loans, and but nonetheless, the depositors were bailed out by the regulatory bodies. And there's a bigger problem brewing here, is that one of the problems that they had is these long-term debts that they long-dated treasuries. And when the Federal Reserve started dramatically raising interest rates, those treasuries their holdings, positions went against them. And this caused several $billion in problems. And that's what is the main problems, but for that specific bank. Now you have to look at, well, okay, so these, as I talked about on my show yesterday, these banks aren't the only ones that are holding treasuries that are going against them. And, you could see that I also talked about the reality that the regional banks were probably going to start to see a bit of a run on them as well, because they probably hold similar type assets. And I speculated that their customers would start pulling money out in order to put them into the big banks. Well, not only did that happen, but investors in those regional banks that are publicly traded, they also came under huge pressure. In fact, a bunch of them were halted. One of the is First Republic, another one that's popular with the tech sector, and they were their stock was down dramatically as well. So they may have averted this short-term problem over the weekend, but the longer-term problem still exists. And the cause of that long-term problem can be put right on the Federal Reserve. This relentless interest rate hiking that they've done in 2022, and now, even though they've slowed down in early 2023, after you've had 14 years of near zero interest rates, and you start jacking those rates up to the federal fund rate is just about at 5% now, you're going to cause some serious problems. The Federal Reserve has been able to ignore the problems in the housing market, car market, other big ticket items. The consumers are, stretched to the hilt. They've got to rely on their credit cards to make ends meet. And when they use those credit cards, on average, they're paying about 19% right now. So it doesn't take a rocket scientist to see that this was going to cause problems. But the Federal Reserve was ignoring those problems. Well, I make the case that the banks are the favorite child of the Federal Reserve. And now that the banks are starting to get into some serious problems, I doubt that the Federal Reserve can continue to raise interest rates. Goldman Sachs, I believe it was today, said that they don't think that at the March meeting, they think that they will pause. I think that's highly likely as well, because how can the Fed keep on raising interest rates when they just caused a major problem with Silicon Valley Bank, and who knows how many other big holders of these treasuries are in problems as well, sitting on big losses. Even the balance sheet of the Federal Reserve is under big problems because of the interest rate hikes that they've done and all of the paper that they had consumed during the 14 years of near zero interest rates. So I do think that the Federal Reserve, maybe they'll do one more symbolic move of 1/4 of a point. I don't even think that's going to happen. I think at the next meeting, they're going to halt, stop, pause. I don't think it's actually a pause, because a pause suggests that they'll continue. I think they're going to completely stop. And in fact, I think that I was earlier recently been talking about them starting to lower interest rates in the second half of 2023. I think that could come in the second or third quarter of 2023, now that these big issues have been come to light in the last 4 or 5 days. Okay, so now I'm going to bring up the US dollar chart and show what happened in the US dollar market today. Here we go. So there you go. It was under pressure on Friday, as you can see here in this red candle, and then again today. Now, what's important here to note is that, as you can see, it's right at the 50-day moving average. I think it's going to break through that 50-day moving average and continue this trend of negative action or bear market that started back in late September. And as you can see, it dropped precipitously, had a death cross in early January, a tough January. It improved in February because some of the employment numbers were giving the currency traders confidence that the Federal Reserve would keep raising interest rates. Their last meeting, they went down to 1/4 of a point. And this action was suggesting that, they might have 3/4, half a point in their next few meetings. I think all of that's gone out the window. As I said, I believe that this action suggests that the currency traders are probably pricing in that there will be a halt to the interest rate hikes. And I believe that you're going to see tomorrow that it gets well underneath the 50-day moving average and starts to continue this kind of action that we saw here. I really think the US dollar's in a bear market that had a short-term rally, and now it will resume that bear market. And these counter trend moves are not unordinary. Look at the action it had when the Federal Reserve was raising interest rates. You see a counter trend rally here, a little one here, a bigger one here, sideways action here. So this counter trend rally that it's had right here, I think that party's over. And of course, with that action, will now, as gold and silver, the most watched price is what they're doing in the US dollar. And so when the US dollar is under pressure, they're going the other way. And the same is true when the US dollar is moving up, they're moving down. Well, as you can see, in Friday, it had a big move from the low was 1834, ended the day at about 1869. Started today at around 1870 and closed at 1916. It was up $50 today and has gone right through that 50-day moving average. And the important trend here is look at this triple bottom that we had here, and then an explosive move from early November through December through January. Then in February, when the US dollar was having a counter trend rally, it also had a counter trend rally. Then it had a double bottom here and has now blasted off due to these problems in the banking sector in the US. And I think that we're back into this trend and headed a lot higher. Silver had an even better day. The gold price was up a couple percent, 2.64%, but silver was screaming. It was up 6.94%, I believe. 6.91%. And as is often the case, it overdid it on the downside, traded below the 50-day moving average, but then blasted through that in the last couple of today, and had a tremendous rally today. And again, I think that we're back to this kind of action here. And silver's headed a lot higher. Another metal that I follow very closely is copper. And some would say, well, okay, if the U.S. economy is slowing down, isn't copper going to be under pressure? And I don't believe it will be, because there's a couple of key factors that will influence that action. That started way back here in early November. China is really pulled back on all their COVID restrictions. So they're back to business in China, which is the biggest consumer of copper. And then you've got the automobile companies that are in the electric vehicle revolution, are needing a lot of copper. And therefore, I think that those two things will outweigh any U.S. economic weakness. And in reality, I don't think it will take very long before the Federal Reserve starts lowering interest rates. And when they do that, they're going to be stimulating the economy. And one of the big beneficiaries of stimulating the economy will be the automobile electric vehicle revolution. And so another big consumer of copper in the US is going to be the need to rewire the aging infrastructure. When temperatures get extremely hot or extremely cold in many places throughout the country, they have blackouts or power failures because of the aging infrastructure. And if you want to move to an electric vehicle revolution, you're going to need to be able to get that energy to those electric vehicles. And the aging infrastructure is just not able to do that. And so the US is going to have to rewire their aging infrastructure, which will be bullish for copper as well. While the US dollar was getting stronger in February, copper's actually had a lot of relative strength. It's been going sideways, and today it was up 0.57%. So I think that copper is going to do very well. Okay, so now earlier today, I wrote this article. I called it "Fed Bails Out Two Failed Banks to Avoid Bank Runs and Gold is Strong. A perfect storm for gold and silver and other metals is shaping up." Again, I talked about the relentless raising of interest rates by the Fed, breaking things. And now that they've broken the banking system, I think that their days of raising interest rates are over. And if you think it's not broken, you're sadly mistaken. Yes, the biggest banks will be fine, but all these regional banks that are holding a lot of treasuries that those trades have gone against them are going to be in similar kind of problems with Silicon Valley Bank, and the customers are not waiting for those shoes to drop. A lot of those, nor are the investors waiting for, in those smaller banks waiting for those shoes to drop. They were, walking out of the bank with their money and moving it to the bigger banks, and the investors were selling those regional banks down pretty aggressively. And as I said earlier, I think that they helped the immediate concerns for bank runs, but I don't think they've avoided it. They've just pushed it off for a couple of days. As I said in this article, the one thing that I'm paying particular attention to is Silicon Valley Bank. What got them in the problems is the mortgage-backed securities and long-dated treasuries that went against them and piled in some major losses. I don't think it's just the Silicon Valley Bank failed in their risk management. The Fed, that the regulatory bodies that are supposed to oversee these kind of companies also failed, because if they did any reasonable stress testing on these banks, they would have seen that they would have failed those stress tests quite dramatically. As I said, I on the weekend, I think that that their customers are going to be fleeing those smaller banks, and that's what happened this morning. The bigger point that a big point that I also made is that the Fed has ignored the slowdown in housing sales, car sales, other big ticket items, the pressure that they're putting on the consumers, because the consumers are needing to use their credit cards, and those credit cards on average are paying close to 20%. Those are loan shark rates, and that can't continue for much longer. And that the Fed will not abandon its favorite child, which is the banks. They will not continue to cause this problem of raising interest rates. The debts of the country, the debts that the Federal Reserve holds, the debts that consumers hold, cannot sustain itself when you've had 14 years of near zero interest rates, and then you start spiking it up so dramatically. And really, you don't need to be a rocket scientist or a Federal Reserve economist, so-called economist, to see that these problems are going to arise, and they have in the last few days. And we're far from the banks are far from fixing the problem. Federal Reserve had an emergency meeting this morning, and I didn't get a chance to see. I looked around to see what they had to say. I think the biggest thing that they had to say was that they're going to be doing a thorough analysis of these the problem with Silicon Valley Bank. But the comical thing is that they don't plan on putting any of those results out until May. Another thing that I read when I was preparing to do this show is that the Federal Reserve, the instrument that they used in order to help these banks out is called a Bank Term Funding Program, BTFP. They got a new acronym. Every time they come out with a new acronym, you better watch out. And they have announced that they will not say who's using this because of the stigma that it brings. You start announcing that you've got to, belly up to the bar of getting bailed out by the bank, the Fed, and you're going to be in a lot of problems as well. And they're not going to announce who has utilized that bank term funding program for a year. You know, this kind of disclosure is pretty dismal, but that's what they plan on doing. As I said earlier, when I talked about gold and silver, they did very well as the Federal Reserve or the US dollar was under pressure today. Federal Reserve's interest rate hiking was very bullish for the US dollar and bearish for gold, silver, copper, and other metals. I think that all of that's about to flip on its head, and you're going to see the US dollar under pressure and gold, silver, copper, and other commodities in very bullish trends as we move forward. I always believe that the best way to play the movement in metals is through the companies that have those metals in the ground. And again, I reiterate that I believe that the main reason is that the valuations, due to all the negative action in 2022 for the metals, a lot of the valuations in these stocks that I feature in my reports, I put this written report out yesterday or today, and yesterday I did a video that you can find on my rocksandstocks.substack.com. Or you can also go on my YouTube at Rocks and Stocks News. And I talked about 30 companies that are, 13 of them are sponsors of my show, and 17 of them are picks in my reports. And that's a good place for you to start looking at potential candidates that will take advantage. But as a group, what I'm seeing, whether I'm looking at the biggest of the mining companies or the smallest, is that the valuations they're getting are at record lows. The last time I saw the valuations like this was in the year 2000. After 2000, the metals market went into a decade-long bull market, these metals-related stocks went up dramatically. During that period, I started my report in 2005, the Allan reports, and I had picked around 30 companies during when I was writing those reports, and over half of them were taken over at significant premiums or became mining companies. And so I think that we're into the start of another of those decade or more long bull markets. Really, I think that the metals space has never been in as primed of a situation for a long-term bull market as it is right now. And a lot of that has to do with the monetary metals like gold and silver. I think that, you know, all of this debt that's out there is a ticking time bomb, and a much safer place to put your money as a store of value is not in currencies, but in the traditional currencies of gold and silver. Then you look at what's happening with the electric vehicle revolution, and due to many decades of underinvestment in exploration and new mine development, the supply chains of many metals are not well prepared for the demand that's going to come from the electric vehicle revolution. And therefore, I think you're going to see a lot of metals performing very well. And ultimately, the companies that have good assets in those metals are going to do extremely well. Another big trend that I think not a lot of people have been thinking about is, you know, the United States sort of made its manufacturer of choice de facto China. And with all of the inflation that's going on globally, you know, it's really forcing a lot of companies to bring their a lot of countries to bring their manufacturing back home. And this is going to take a lot of raw materials to do that. And I heard Robert Freeland not too long ago mentioning that he thinks it's like the revenge of the miners. We've been under love for so long. And meanwhile, you know, all of these technologies that we're trying to move to a greener energy sources are going to need a lot of mining to make that happen. And if you don't spend the money over a few decades, you know, you can't just turn mines on. They take once they've been found, they take 7 to 10 years to go through the permitting and mine building and economic evaluations. So you can't just turn these things on like a light switch. Meanwhile, the demand that's coming is like it needs to be turned on like a light switch, but that's not going to happen. And if that doesn't happen, then the price of these commodities, these metals, are going to go up dramatically, a lot higher than a lot of people think. And that's why, you know, I believe that the best play on metals going up is the ones that have metals in the ground. And earlier today, I put out this report where I had noticed early in the morning, not long after trading started, I saw some good moves on the juniors. Bell Copper is currently drilling a big copper target in Arizona. I recently did an interview with their CEO, Tim Marsh. I like their chances to hit the elephant that they're looking for, a copper elephant in Arizona. Arizona is well known for these big deposits. And they're looking for one. I think their earlier drilling, they already clipped the side of one, and now they're going for the guts of that system. And I really like their chances. They were up, when I wrote the report earlier, they were up 20%. They closed up 8.6%. Blackrock Silver, they were up a couple percent. They closed at up 1.5%. I really like their silver resource that they have that is growing in Tonopah, Nevada. It's already a high grade resource that I think will get a lot bigger. One of the critical mass that you sort of have to pass with the silver project is to get a resource over 100 million ounces. They're about halfway there in the resource calculation, but since then they've expanded on the resource by about double in their drilling. So I think they're on their way to that critical mass. And then at their Silver Cloud project, they hit an epithermal vein with bonanza grades, 70 grams of gold, hundreds of grams of silver. And that's a seminal moment or a big milestone for these kind of projects, because in an epithermal vein, what you need to find is the boiling zone of that epithermal vein. Don't want to get too geological on you here, but when you tag the boiling zone of an epithermal vein, you've met a major milestone. And that's exactly what they've done at their Silver Cloud project. Firefox Gold, I wrote about them this morning. They were up 5% in the start of the day. They ended up 5.3%. They're in Finland. They're looking for an orogenic gold system. They've made promising discoveries of high grade, so I think that they've tagged into an orogenic gold system. Finland is a hot country for gold exploration because other companies have been finding these orogenic gold systems. I think that Firefox has one or more, and I like their potential. They're one of the cheapest juniors in Finland, and I think with future drilling that will change. Galantas Gold was up 6% this morning. They closed up 6.2%. They have an orogenic gold project in Northern Ireland. They've been busy drilling into that for the past couple years. They've hit plenty of high grade to bonanza grade gold with their drilling. So they got that 2 boxes checked off. They've shown that they have an orogenic gold system. They've shown that they have the high grade gold that you want to find in an orogenic gold system. Now the next trick is to keep following it deeper. These orogenic gold systems tend to go thousands of meters below the surface, and as you get deeper into them, you get closer to the heat engine that caused that gold mineralization. And I think that that's what they have on their hands. And as they go follow that system deeper, I think that they could really turn into multiples of their current valuation. Golden Lake Exploration was up 9% at the morning. They closed up 9.1% on the end of the day. They're in Eureka, Nevada, close to I-80 Gold and Paycor Minerals. Like their neighbors, they've found a high-grade CRD with high-grade to bonanza-grade gold overprint. I think they've got a great target there to keep expanding on. Plus, they have recently done announced a bunch of surface sampling, and in areas where there had been historical mining many decades ago, and they had excellent mineralization of those CRD metals, silver, lead, and zinc, as well as gold. And I think not only do they have one discovery on their hands, but I think they could make more. I-80 Gold was up 2.6% in the morning, and they ended up 3.9% up. They've got their bonanza grade CRD in Eureka, Nevada. It also has pending assay results from drilling on that bonanza grade CRD. I think they have one of the best new discoveries, not just in Nevada, but maybe worldwide. When you look at the value of the metals in their CRD, you're talking over $5,000 per ton. That's spectacular stuff. And they found it in 3 zones so far. Not far from those 3 zones is a big geophysical anomaly that they recently drilled. I did an interview not too long ago with Ewan Downey, and he was pretty excited about the drilling that they've done into this big geophysical anomaly. I think he likes what he sees, and I think they've got a lot of great news coming out in the next days to weeks and throughout 2023. I really believe that they've got the assets to create a multi-billion-dollar company. And right now they have about a $700 million valuation. So plenty of blue sky for them. Right beside them is Paycor Minerals, and they've also found one of these bonanza grade CRDs. And because of that, their close proximity, and because I-80 Gold is a bigger company, I-80 Gold made a takeover offer for Paycor Minerals. And since that takeover, they've kind of been moving in lockstep. And I think you'll continue to see that. The deal probably won't close until, I think it's about late April. But when it does, the shareholders in Paycor Minerals are going to become shareholders in I-80 Gold. And I really believe that this is a good deal for both companies. I think it's the asset that Paycor Minerals has is better in the hands of I-80 Gold. And for the Paycor Minerals shareholders, I believe that by owning shares in I-80 Gold, that their money will grow faster and longer by owning I-80 Gold than it will with Paycor Minerals. So that's the crux of why I think this is a good takeover. I'm kind of proud that both those companies are sponsors of my shows, and I've been talking about their success as they've been making that success. McEwen Mining is a pick. I've done a couple interviews with Rob McEwen. They were up 7% at the start of the day. They closed up 8.2%. They've been making a lot of news lately because of their McEwen copper asset. McEwen Copper is private. McEwen Mining owns around 52% of it. Another 14 or 15% is owned by Rob McEwen. The same amount by Rio Tinto, RTZ that has a division called Newton, and Newton has this recovery technique that they think will apply to McEwen Mining's copper deposit and increase the recoveries and increase the time that it takes to get the copper out of the rocks that it's in. Then a big car manufacturer, Galantas, put 150 million into the deal as well. So all three of those entities, Rob McEwen himself, Newton or Rio Tinto, RTZ, and then also Stellantis owns about close to half. So the other is owned by McEwen Mining. So they've been really performing well over the last 4 or 5 months. And I believe that they've got a lot more blue sky ahead of them, because I think that McEwen copper asset is undervalued inside of McEwen Mining. And I think McEwen Mining is undervalued because they've had some problems with their gold production. But they're turning the corner on that gold production. They're bringing their costs down. They're improving the grades and the recoveries. And I think ultimately the gold assets are undervalued as well. So that's why they've been doing very good. Relevant Gold was up 15% this morning. They closed up 10%. They're a new pick in the report that I started coverage in February 12th of 2020. Actually, I started before then. I made them an official pick on February 12th. They've got an orogenic gold project in Wyoming with pending assay results from their recent drilling. I think they've got a very good chance to deliver something very good. And that's one of my new picks. Sokoman Minerals was up 5% at the beginning of the day. They ended up flat on the day. They've got an orogenic gold system in Newfoundland called Moosehead, and what I think that they're at a seminal moment for that particular kind of project, because they got their bonanza grades, their highest grades over the thickest intersections in their deepest drilling. And that's the nature of these orogenic gold systems. You got to follow them deep. And that's where you get the higher grades. But because they're so high grade and the cost of production is so low, they can be money-making machines. And I think they've got one of those on their hands. And then they've also got this emerging lithium project that I'm very bullish on. So this company is currently drilling, and they are going to have a strong news flow throughout the end of the year. Summa Silver is another company that I'm bullish on. I made them a new pick in February 2023. Oh, I put the wrong date for Relevant Gold. It should be February 2022. Same as with Summa Silver. They were up 5% early this morning. They closed up 3.6%. They've got this phenomenal silver story in New Mexico. They've been hitting it out of the park with the grades that they're getting from their drilling. They've got another project that they're going to be drilling here soon. And I like their chances to go higher. Timberline was up 7% earlier today. They ended up flat on the day. They're another player in this Eureka, Nevada area. Like earlier when I was talking about I-80 Gold and Paycor Minerals and Golden Lake Exploration. Their main focus right now is on they've got a large land package in Eureka. And what excites me the most is they got this gold resource that they've been drilling away on and expanding. And as they expand, all the rock packages and all the structures are all pointing towards this big geophysical anomaly that they have. And I think that geophysical anomaly is what caused the gold mineralization in the resource. And it's not too far from now that they'll start drilling into that. And when they do, I think that that's going to be a home run. I think they've also got another home run project at their New York Canyon ground It's right beside Paycore and in close proximity to I-80 Gold. On that project, they had done there was lots of historical mining. They recently did a big property-wide sampling program, and they got those excellent CRD numbers of silver, lead, zinc, as well as gold mineralization. So they've got what I think is a lookalike potential to what the other three companies that are all closely together. You've got I-80 Gold, Paycore, Golden Lake, and New York Canyon of Timberline. Another company that I talked about in this article was Walker River Resources. They were up 14% this morning. They ended up 5.6%. They're in Western Nevada in the Walker Lane trend. At their Lapon Canyon project, I think that they've got a 2 to 5 million ounce gold target on their hands with widespread gold mineralization in the side of a mountain. I call it Lapon Mountain. They've found anywhere from 1 to 2 grams all the way up to bonanza grades, and it's well distributed throughout this mountain. And I can easily see, based on the structural story, the large alteration, the widespread gold mineralization, that could easily be a 2 to 5 million ounce gold target. There's not many of those around, and Walker River Resources has one. I closed this report off by saying that Blackrock Silver, Galantas Gold, Golden Lake Exploration, I-80 Gold, Paycor Minerals, Sokoman Minerals, Timberline Resources, and Walker River Resources are all sponsors of the Rocks and Stocks news reports. Want to make everybody aware of that, and also thank those companies. They help me to be able to put out the reports I do. And as always, I always close my shows off and my reports off by saying my reports are for information purposes only. For making any investment decisions, it's important to speak with your financial advisors and do your homework. If you're looking for my most current shopping list, look to the report, the video report that I put out yesterday. In it, I talked about 30 of my picks. 13 of those are sponsors, and that will give you a good shopping list. Then go to my YouTube channel at Rocks and Stocks News, or on my rocksandstocks.substack.com, and you'll find a bunch of interviews that I've done with almost all of the companies that I follow closely, have as picks or sponsors. On that note, I'm going to stop sharing here and say to you, thank you very much for joining me today. Have a great day, and we'll talk to you soon.